I'm Dan Mitchell of the Cato Institute, here to talk about the latest scheme from Washington, a proposal to impose a type of national sales tax known as a value-added tax, or VAT. This Center for Freedom and Prosperity video will discuss whether giving politicians a new source of tax revenue is a good idea. As the name suggests, the VAT is a tax levied on the value added at each stage of the production process. Using a piece of furniture as an example, there is a tax levied when the raw timber is sold, a tax when the sawmill produces lumber, a tax when the manufacturer builds a chair, a tax at the wholesaler level, and then the last stage of the VAT, when a retailer sells the chair to a consumer. The final tax to the consumer, at least in theory, is the same as a retail sales tax of the same amount. So is this a good tax? Some people point out that a VAT is a single-rate, consumption-based system, much like the flat tax or national sales tax. And they correctly note that this means that the VAT does not do as much damage per dollar collected as the current income tax. This would be a persuasive argument if proponents wanted a VAT to replace the Internal Revenue Code. Unfortunately, that's not the game plan in Washington. The politicians want a VAT, and they want to keep the income tax. Or, to be more accurate, they want a VAT, and as you can see on the screen, they also want to raise other taxes as well. So why is the crowd in Washington so hungry for more revenue? The answer, of course, is that politicians love to buy votes by spending other people's money. And let's not forget that the combination of an aging population and unconstrained entitlement programs mean that a dramatic expansion in the size of government is scheduled to occur automatically in coming decades if there is no reform of Medicare, Medicaid, and Social Security. Simply stated, there is no way to finance all this new spending without an additional broad-based tax. But this is exactly why a VAT should be vigorously resisted. Government already is too big in America. Blocking a VAT may not be a sufficient condition to control the size of government, but I guarantee you it's a necessary condition. A new source of revenue would be akin to giving keys to a liquor store to a bunch of alcoholics. Let's look at the real-world evidence. It clearly shows that VATs are associated with both higher overall tax burdens and more government spending. In 1965, before the VAT swept across Europe, the average tax burden for advanced European economies, the EU 15, was 27.7% of economic output, roughly comparable to the U.S., where taxes consumed 24.7% of GDP. Those European nations then began to impose VATs in the late 60s. This has not led to good results. By 2006, the average tax burden for EU 15 nations had climbed to 39.8% of GDP. Now, the tax burden did also increase in the U.S., but at a much slower rate, rising to 28% of economic output. The spending side of the fiscal equation is equally dismal. In 1965, before the VAT, government spending in EU 15 nations averaged 30.1% of GDP, not much higher than the 28.3% of economic output consumed by government in America. According to 2007 data, though, both America and Europe have moved in the wrong direction, but Europe's slide towards statism has been much more pronounced. Government spending now consumes 47.1% of GDP in EU 15 countries, significantly higher than the 35.3% burden of government in the United States. Now, some sympathizers concede that a VAT will increase the overall tax burden, but they claim it will preclude higher taxes on personal income and corporate income. This is a triumph of hope over experience. Let's again look at Europe. Taxes on income and profits consumed 8.8% of GDP in Europe in 1965, which actually gave Europe a competitive advantage over the United States because we had taxes on income and profits of 11.9% of economic output. Then Europe put in the VAT, and what happened? By 2006, the tax burden on income and profits climbed to 13.8% of GDP in Europe, which was actually higher than the 13.5% of economic output figure for the United States. And even if we just look at the corporate tax data, the same trend of rising receipts in Europe is evident. Higher VATs lead to higher income taxes, not lower taxes. Last but not least, some people are intrigued by the VAT because it is border adjustable. This means that there is no VAT on exports, but the VAT is imposed on imports. For mercantilists worried about trade deficits, this is seen as a positive feature. But not only are they wrong on trade, they do not understand how a VAT works. Under current law, American goods sold in America do not pay a VAT. But neither do German-produced goods that are sold in America. Likewise, any American-produced goods sold in Germany are hit by a VAT, but so are German goods. In other words, there's a level playing field today. Now, if America adopts a VAT, a level playing field will still exist, with one key difference: the politicians in Washington will get more money whenever any products are sold. The income tax system we have today is a nightmarish combination of class warfare and corrupt loopholes, but adding a VAT does not solve any of those problems. All that happens is that the crowd in Washington gets more money to spend and a chance to auction off a new set of tax breaks to interest groups. That's good for Washington, but it's bad for America. I'm Dan Mitchell on behalf of the Center for Freedom and Prosperity. Thanks for watching.